Hello, this is Ed Burke with PlaceForTraders.com for Monday, February 23rd. Starting off in the March S&P, I wanted to go back and talk a little bit about the numbers that I put out Thursday night for Friday's open, for Friday's trading session. I had talked about the level of 784, 780. If the market was trading lower than 784, we should see a bearish day. Trading higher than 784, we should see a bullish day. Now, going back here, early Friday morning, the market trended lower all throughout the early session. Right here is where the market opened up in this bar. This is 9:30 a.m. Eastern Time Friday. Now, the market opened. The March S&P opened at 762.5. On Friday, I talked about if we're trading lower than 74, it's going to be a bearish day. The first line of support being 771, second line of support being 766. Now, opening at 762.5 is obviously a bearish day, and we're below both those lines of support. So why it's important that I go back and talk about this is that you might be asking yourself, well, what do you do when the market is below both lines of support? Do you buy it then because the market will rebound and go higher than 766, the second line of support, or do you short the market because the market is going lower? Anybody who's done any analysis with or work with lines of support and resistance, when a market is trending lower and it's breaking all support levels, those support levels can become lines of resistance, and vice versa. When you have a very bullish day or a bullish market, the market's breaking all the resistance lines. Those resistance lines become lines of support. So, having said that, when you're looking at what to do with these numbers that I put out, obviously, if the market is very bearish, you don't want to be buying a bearish market. I mean, that could be like sticking your hand out and trying to catch a falling knife. You want to be going with the trend. Now, I drew two lines here, the first one being 766, the second line being 771. If you then view these lines of support as lines of resistance because the market had trended lower all night and it's below both those support lines, you want to use those support lines as resistance. So, obviously, shorting the market anywhere in here between 766 and 771 would have been obviously a good idea. The market did trade at around 10 o'clock Eastern Time. It traded as high as 774.25, but continued to trend lower all day until 1:15. At 1:15, the market bottomed out at 752.5. And as you can see, later on in the day, you had a sharp turnaround in prices. The market rallied back. That was all due to the White House coming out and squashing rumors about nationalization or reprivatization of major banks like Citigroup and Bank of America. Obviously, if you bought the market at 766, looking that hey, the market might come back up because it's below our second line of support. Yeah, you might have rode the market all the way down to 752.5 before you got lucky and the White House came out and squashed these banking rumors, and it might have turned out to be a good trade. But you don't necessarily, when doing analysis with support and resistance, you don't want to be betting on lucky breaks or something. I mean, stuff happens and news comes out in the market, but you're trying to use the trend as your friend. The market's trading lower than 784, you want to be short the market. And if of course your support lines, if the market is so bearish that it blew through all the support lines, those support lines then become resistance. Use that as your guideline. Having said that, I want to go to the numbers for Monday. I'm looking at 767. If the March S&P on the open is trading higher than 767, I'm looking for a bullish day. If the market is trading lower than 767, I'm looking for a bearish day. The first line of support I'm looking at is 754. The second line of support is 741. On the top side, first line of resistance, 782. Second line of resistance is 793. Now, it's about 9 o'clock p.m. Eastern Time as I record this message. And just recently we had a breakout way above. Right in here was right around the 767 level. This is about 765. So we just broke out just recently. So in all likelihood, it looks like we're having a rebound in prices. We're trading higher than 767. But that's a very important number. If the market is bullish, like it looks like so far, in all likelihood, you'll be looking more at that 760, because the market's trading right now at 777. So you might be looking at this 767 if the market holds up as a line of support. Thank you for tuning in. If you haven't already, go to my website. It's placefortraders.com. Sign up for the free emailed alerts. We alert you on what exactly we're doing during the trading hours. It's totally free, no obligation. Go on there, get yourself set up. Thanks a lot.